Welcome to our session on delivering the difference, demystifying indexed universal life. And we're talking today about how to sell. We're talking about some different ways to improve your sales concepts. Maybe you already understand indexed universal life and you're looking for some additional insights on our products or sales concepts, or perhaps you're relatively new to indexed universal life and you're just discovering places that it can be sold. So that's what we're going to focus on today. We're going to hit three items. The first is an IUL target client. What are you looking for in someone to talk to about indexed universal life? And that's going to be a short topic. Then the next two are going to be more in depth. We're going to go through some indexed universal life sales concepts, some of the more popular concepts that we're seeing out there. Additionally, we're going to talk about products and some tips. And the products we're going to talk about are single life IUL and which each product is designed, how they're most effectively marketed and promoted, and the concepts that work with each particular product. One of the questions I always get is this being recorded? Yes, this is being recorded. So you can certainly feel free to write down things as you're going through the session, but you can always go back and view the recording as well. As you're going through and listening to these sales concepts and tips, or as I talk about the potential IUL target clients, I would encourage you to start thinking of your own client block, your own clients that you have. And when we get to a sales concept or something that might be of interest, write down that person's name, because this being the last part of our series, this is the time to start putting it into action. And so I would really suggest to start thinking of client names as you're listening to this session so that you've got someone you can call on and start promoting and selling IUL. Now let's look at the typical IUL target client. Of course, being life insurance, we always start with death benefit. So we need a client who has a death benefit need. Of course, insurability, they need to be insurable, but also have a death benefit need. And really, that's a lot of the clients out there. So then the next focus we have is, well, they need a desire for a secondary desire for cash value growth. I mean, if it's just pure death benefit, you could look at a GUL or term, but they're also looking for some cash value growth and access to cash value or cash value growth. And then we need someone who wants the idea of protection against downside risk, because there are all sorts of vehicles that can accumulate cash value. We're looking for someone who values and appreciates what indexed universal life can bring to the table. And that is that indexed universal life has the potential for upside cash value growth in a nice tax advantaged way, but has also protection against that downside risk in the sense that you can't get a negative interest rate credit when the market goes down. So as you're thinking about clients as we're going through today's session, think about someone who's insurable, has a death benefit need, but ultimately they're also looking for cash value, access to cash value with cash value growth, and they like the idea, or would like the idea when you present it to them, of what indexed universal life can provide. That ratcheting aspect of only going up in terms of index returns and not getting negative returns when the market goes down. So now let's hit on the sales concepts, because this is where it starts really getting interesting. This is where these type of sessions start making you money. We're going to go through a number of sales concepts here today. And the nice thing about all of these concepts, I'm not going to hit all of them. These are some of our brochures that we have. There's a lot of information on our website. You can certainly go out there. We have a lot of references to presentations on some of these sales concepts, certainly the marketing guides and agent guides that are available to you. But we're going to talk about several topics. We're going to talk about income replacement with kind of an emergency fund, retirement planning, buy, sell, exec bonus, estate planning, 1035s, not all of the concepts, but a number of them that are popular with indexed universal life. The first one I have here is kind of an income replacement with emergency fund. The idea here is that many people need death benefit protection during their working years. And you can do that with a term policy. You can certainly do that. But there's an advantage to cash value. So what do you get with cash value that you don't get with, like, for example, a term policy? Well, cash value provides flexibility and control. Cash value provides an exit strategy. What What if they don't need the coverage? They can exit out and have something that they can leave with. Cash value provides the opportunity for emergency funds. Cash value provides the opportunity for a 1035. Cash value provides a number of things, including flexible funding. If you need to miss a premium, for example, for some reason, you can do that. So there's a lot of advantages to cash value. And with a permanent policy, and what's not really on here, but with a permanent policy, you also have the advantage of some additional benefits that you don't have, for example, on term. The accelerated benefit package of chronic and critical illness, where you can accelerate death benefits during your lifetime for your living needs. But ultimately, if it comes down to income replacement during their working years, you really need to think about, well, is this competitive? Is this compelling? And I would suggest to think about just looking at buying term and invest the difference. And that's, of course, what you're going to kind of run up and do. Oh, why don't I just buy a cheap term policy and save the cash? Well, in real life, sometimes people don't do that. They say they're going to buy term and invest the difference, but in fact, what they do is they buy term and spend the difference. So the nice thing about Indexed Universal Life is it's kind of a structured in that way savings program. So if you want to overfund it, it's more of a formalized, structured type of thing where they're going to have the ability to have some discipline, impose their own self-discipline in savings. But if you want to present this or get an idea of how well it compares, we have, with our illustration software, we have Insmark. Insmark is an illustration presentation program which can take the data from the illustrations and do different things with it. You can present different concepts. You can compare and do internal rate of return reports or graphical displays of cash value growth. And one of the things you can do is do either an internal rate of return or a kind of a term and invest the difference type of idea, where you can present to the client how well this cash value growth can do, and how well the Indexed Universal Life cash value side of it can be, and how compelling it can be, really. Because again, you're getting the advantage of not only tax-deferred cash value growth, but potentially tax-free in terms of by taking loans on a non-MEC. So there's a lot of nice advantages to accumulating some cash in here, even if it's just an income replacement type of sale. Okay, let's look at the next sales concept, life insurance for retirement planning. And this is probably the #1 sales concept, really probably in the industry for Indexed Universal Life. And it's our #1 sales concept too. Retirement planning is all about death benefit protection during their working years. Again, we always start with death benefit protection. Don't apologize or try to minimize that aspect of it. It's certainly a very valuable and important part of any Indexed Universal Life sale. And so retirement planning is, first and foremost, death benefit protection while they're working. But then we have that secondary goal of cash value. So we're also looking to build up some cash value. So we want to build up cash value to take monies out in retirement. But one of the nice things to realize is that the death benefit is always kind of in excess of that cash value. And until you really mature the policy at age 100, for example, then the death benefit and cash value can be the same. But even if you're at age 70 or 75 or 80 and you're taking out incomes out of the policy, the death benefit is always higher than the surrender value. So there always is advantage to that death benefit even beyond the working years. And then other things to consider when you're doing retirement planning, remember the accelerated death benefit endorsements that you can accelerate for other living needs. Sometimes they may have needs that are in excess of the retirement planning goals, and you can actually accelerate death benefit for those needs, such as a chronic illness. And if you want to help present this retirement income concept, and then the last session I kind of did some information about retirement planning and ways to make the illustration compelling, so I'm not going to get into all of those. But another tip here is, again, Insmark has a tool on there for either you can do an internal rate of return report or life versus outside investment. And I think that's a really good one to help you present the idea of retirement planning. So you run your illustration, North American software, and there's a link on the software to click on Insmark. Insmark pops up, opens up. It's another program. It would be an expensive program if you were to buy it on your own, but we at North American are paying the fees for you to use that at no cost for your North American illustrations. So it would launch the Insmark illustration software, and you can do a comparison of life insurance versus an outside vehicle, like life insurance versus a mutual fund, or life insurance versus an IRA or a 401k or something like that, or an annuity. And you can present how well this concept works from a mathematical standpoint. If people like numbers, you can see numerical grid type of comparisons. If people like charts and graphs, they're more visual, you can show it on a visual basis. But it's a nice tool to be able to help present for that client who wants a little bit more detail, a little bit more background as to the competitiveness of indexed universal life versus other choices. So that's a great thing to remember to present the retirement planning concept. I had a question here. Someone says, Caesar said, what if someone takes out a loan on their cash value? Doesn't that reduce the death benefit? And I think that's kind of alluding here toward the second death benefit, the bullet here. Yes, if you take a loan, the death benefit is reduced by the amount of the outstanding loan. That's how life insurance policies work. But as the surrender value is reduced of the loan, the death benefit is reduced as well. But again, still, until you get maturity, there's always going to be a value to that death benefit where it is in excess of the surrender value of the policy. And of course, the surrender value policy is the account value minus the outstanding loan. So I'm flying through some of these concepts, and we can get into more questions here as we go on or toward the end. I'll certainly leave time, but let's go through a few more concepts here. And again, I'm going quickly. This is not the idea to totally educate you on all of these concepts. The idea is to give you a flavor of which concepts you might be interested in digging into more in depth on. And again, on our website, we have information much more in depth on each of these concepts. The next one is buy-sell. Buy-sell is a concept that is used for business owners, typically owners of the company, who a small company, could be a 2-owner situation, could be a 3 or 4 or 5 owner, could be a stock redemption type of buy-sell, which is a larger company. It could even be a sole proprietorship. That's called like a one-way buy-sell. So there's a lot of options here. If you're working with business owners at all, or someone who is in a closely held business, buy-sell is something to really think about adding to your repertoire. So death benefit, of course, is a major part of a buy-sell component life insurance policy. Of course, the buy-sell itself is a contract. It's a separate contract drawn up by lawyers. The life insurance policy helps to fund or support that buy-sell. So death benefit is very important because if one of the owners dies, we need to pay it off. So then what does cash value provide, though? Because what's the advantage of IUL in a buy-sell? Well, death is just one of the triggers in a buy-sell. What happens if the other owner gets divorced? Divorce is often a trigger in a buy-sell. What if they are unable to perform their duties? They're disabled or something like that. That's another one. What if the other owner just leaves the company? Or what if the other owner retires? There's a lot of different triggers in a buy-sell, and death is only one of them. Cash value provides more options, more control, more flexibility to help cover more triggers. And ultimately, if it turns out that the owners don't die or the triggers are not exercised, cash value provides an exit strategy. You can get monies back at the end instead of just losing it like you would in a term policy. So I would really have you consider the value of indexed universal life in a buy-sell. And again, if you want, how do I present this, or what are some ideas to help present this to a client? Again, Insmark, probably with the internal rate of return report or that life versus outside investment, those are excellent ideas for presenting to an owner or a key owner of a company the value of life insurance, of an IUL for buy-sell. Sticking on the business side, we're looking now at executive bonus. Executive bonuses generally about the idea where a company wants to value their key executive and they want to purchase a life insurance policy for them as part of a salary package or an incentive or some sort of way to entice them to see the value of the company and stick around. So executive death benefit protection, why cash value? You can certainly have an executive bonus where the company is just providing a death benefit to the client, to the key executive, like a term policy or a GUL. That's fine. That certainly works. But the advantage of cash value is that it provides an extra level of incentive. And a lot of times we see executive bonus with indexed universal life as being kind of a combination of death benefit and retirement type of planning, almost like a deferred comp type of structure, where they can get the death benefit protection for their family, but also potentially have a nice retirement income source through this indexed universal life policy. And in terms of presenting that aspect, I would again put you back to Insmark as a great tool. And again, I would look for the internal rate of return report or the life versus outside investment to really demonstrate the value that cash value and indexed universal life can provide versus maybe another vehicle. Another indexed universal life concept is estate planning. And one of the things we typically see in estate planning is some sort of guaranteed death benefit. And we do have an indexed universal life policy, our guarantee builder, that does have a guaranteed death benefit. So you can guarantee the death benefit to age 90, 95, up to 120 death benefit guarantee. So it also, of course, has the other advantages that you can use the life insurance maybe before death if there's some other thing, because one of the challenges is it's a shame to say, oh, we've got all this great benefits that's going to go to the heirs, but our client is now death benefit rich and cash value poor because they need some funds for a chronic illness or critical illness or some other living need situation, but it's all tied up in life insurance. So having accelerated death benefits can give a little bit more peace of mind in that regard, knowing that you can access cash. But one of the other nice things that cash value provides in an estate planning sale, and again, you have to think, why index universal life for estate planning? Why don't I just get a GUL? Who cares about cash value? It's estate planning. This should be guaranteed death benefit and no need to worry about cash. Well, cash value provides a lot of things in an estate planning sale. And our guarantee builder with some really nice cash value growth, one of probably the leading products out there in terms of cash value growth on a guaranteed death benefit. Cash value provides things like an exit strategy. Why do you need an exit strategy for estate planning? Well, sometimes estate needs change. We've seen this during the past 8-10 years. We've seen estate tax laws change. And what may have been needed for estate planning now might not be needed in the future. State death taxes could change, federal death taxes could change, all of these things could change. Sometimes the clients have a spend down strategy of their estate. They're working with their other estate planners or attorneys or financial advisors to gradually spend down the estate. And my family is an example of this. My parents have a significant size estate, but what they're trying to do is gift those assets during their lifetime to try to shrink down the size of the estate so that they're not subject to as much estate taxes. And it could be through a nice plan that you might get down to where you don't need this as a vehicle for estate planning anymore. And the cash value provides maybe an exit strategy if desired. Cash value, of course, provides flexibility and control. What if I need the money for something else? And cash value provides the opportunity for, I guess, a future 1035. Things happen. 1035s happen. If you've been in the business for any length of time, I'm sure you've been involved in 1035 exchanges. And if you go to a guaranteed life policy with very little or no cash value, the future 1035 opportunities are basically non-existent. You're kind of locked into that. And so cash value provides a great opportunity in that regard as well. So really think about it. In some of your guaranteed death benefit sales where you think that cash value is not important, think about, well, boy, what would cash value provide? And is that something really worthy of considering? And I think IUL can do that. And the last concept I have here is 1035 exchanges. There's a lot of different ways that you can improve a client situation with a 1035 exchange. You can give them more coverage for the same premium, or you could give less premium for the same coverage, or it could be better cash value growth potential. It could be providing a guaranteed death benefit where there previously was none, or just other policy benefits that their old policy did not have. Maybe that's chronic illness benefits or critical illness benefits. But one of my tips on 1035 exchanges is ask and listen. Ask the best thing I can suggest for when you're approaching a client with a 1035 to really make your presentation to them or your idea to them the most impactful for their personal need is to ask the question. And it's a 3-word question. I would encourage you to use this whenever you find a client who has an enforced policy that you're thinking about. Ask the question of, what's that for? What's that for? And then just wait and listen. And sometimes they won't have any idea what it's for. I don't know. We bought it 20 years ago or 15 years ago. I haven't spoke to the agent since then. I don't remember what it's for. Okay, well, there's an opportunity for you to open up and discuss and go to other ideas. But sometimes they'll have an idea. Oh, this was for estate planning, or oh, this was supposed to be building for retirement income, or oh, this was for death benefit protection. But the important reason to ask, what's that for, is if you don't ask what's that for, you're going to make an assumption on one of these. You're going to assume that they want more coverage on a 1035 for the same premium, where that might not be the thing. They might not care about more coverage, but if you could show them lower premium, they'd be over their heads happy. But you're showing, oh, I can give you more coverage for the same premium. That might not be what is their hot button. Or you could go the other way and show them, oh, look how much I can save for the same coverage. The premiums may not be important to them. Maybe they would be really thrilled if you could show how you could get 50% more death benefit for the same premium amount. Maybe you're going to show them something that has more cash value growth potential. And if you show, oh, less premium for the same coverage, and then they see the cash value growth is not as good, they're not going to be impressed or excited. You need to find out what's their hot button. What are they most wanting to see this policy do for them? And the best way to do that is to ask, what's that for? And then use their answer in terms of to derive which way you're going to go with a product. And IUL can do all of these things, but you need to find out which one is most important to them and focus on that. And then now we'll hit on the products and just a few little tips. So we have a number of different indexed universal life products. I'm actually not going to go through all of them. I'm not going to go through the survivorship or our specialty single premium product. I'm going to go through kind of our main 3. And I'm going to give you an idea of where they fit. Actually, I will go. We do have survivorship on here. So we're going to go through the Builder IUL, the Rapid Builder, the Guarantee Builder, and the survivorship. And then I'll give you just a little bit more on tips. The Builder IUL. Fortunately, the name on our products are somewhat indicative of what they do. The Builder is all about building cash value. This is designed for high cash value growth. When you think of the Builder IUL, maximum funding is your focus. This is not the product to use if you're just funding it at target, or how cheap can I get to get the death benefit coverage, or if you're looking for, I'm just looking for a dollar of cash value at 100, the Builder is not for you. That's not where it works. It works best when you're maximum funding it to essentially the 7 pay limits, the MEC limits. That's when it's going to really sing. It's a non-guaranteed death benefit product, and as such, this is probably most effective for the income replacement type of potential, that death benefit during your working years, but also cash value. Retirement supplement, that's probably the #1 sales concept for the Builder. But other things that are associated with building cash value, the buy-sell agreement, again, can work really well if you overfund it. You've got nice cash values that can be used as what happens if they don't die. You've got some great cash values. An executive bonus plan, kind of that non-qualified deferred comp, could also be 1035 exchanges. 1035s could really be all of these products. But these are the concepts that are probably most compelling for the Builder IUL. Then the rapid builder. The rapid builder, again, let's look at the name, rapid builder. It's a rapidly building cash value. This is all about quick cash value growth and the most early access to cash value. It's a non-guaranteed death benefit, but it's that early cash value growth, but it does have nice long-term potential, but not as much long-term potential as, for example, our builder product, or maybe even not as much as our guarantee builder. This is early, quick access to cash value. One of the ways that it can get early cash value growth is there's no premium expense loads on this product. So you're not starting 5 or 6 or 7 or whatever percent in the hole because of a premium load. So no premium loads means early cash value growth. A waiver of surrender charge option is early access to that cash value. And this has an optional waiver of surrender charge rider. I think most of the time people sell this product, they put that rider on here. But that also means not only do I have the potential for quick cash value growth, but also access to that quick growth. And so that product is really about that early, rapid access to cash. So some of the sales concepts for the rapid builder are income replacement. Again, that death benefit protection during your working years, and what if I need access to it for something else? You've got access to it. Retirement planning. Yes, it can work for retirement planning, perhaps not as well as the builder product, but if you've got a client who says, well, I really don't like the surrender charges that kind of come with a builder product, this is a way to overcome that objection. If they just don't like the idea of surrender charges, if they just want to have a little bit more flexibility, yeah, it might get them a little bit lower retirement income, but if that's preventing you from the sale, this is a good product to have in your repertoire. This is a product that works pretty well for the businesses. Businesses, they want access to that cash value for whatever needs, whether it's key person, buy, sell, executive bonus. Some of the business sales concepts are pretty good for the rapid builder. And one of the more effective ones is the 1035 exchange. 1035 exchange, one of the objections that you sometimes get on a 1035 exchange is the one of, hey, where'd my money go? You'll show them a really nice illustration. The non-guaranteed column looks great, but what happens? Their eyes immediately go to the guarantee column in year one. And on a typical product with surrender charges and premium loads, they look at the guaranteed death benefit on year one and go, whoa, wait a minute, where's my money? We're rolling in, $100,000, and I see the surrender value is only 89. What happened? So the rapid builder can really overcome that objection of where'd my money go on a 1035 exchange. And asset transfers. Actually, one of the sales concepts is not written out here that's very popular for the rapid builder is like a smart money sale, where you're dumping in a large asset transfer into the rapid builder, getting that death benefit protection and that leverage that death benefit protection provides. Again, until you reach maturity, that death benefit's always higher than the cash surrender value. So you're leveraging that cash value into a larger death benefit that can be accessed for death, of course, and also for chronic illness or critical illness or terminal illness. But also with the rapid builder, you have a little bit more opportunity to see the access to that cash value if they need it through that waiver surrender charge rider. The guarantee builder is our product that, again, the guaranteed death benefit. This is a guaranteed death benefit that can guarantee all the way out to age 120. But while it is a guaranteed death benefit that you can see on any number of universal life or even some indexed universal life products, this guaranteed death benefit product has some really nice cash value growth potential. So nice to the extent that it's very close to the builder for cash value, which is an amazing product for cash value. So it can generate a lot of cash value. This product can also work well. Remember I said the builder would not work well for moderate or low funding. The guarantee builder would also work well for moderate or low funding. So if they don't want to fund it to the maximum level, then you might want to look at the guarantee builder. This is an effective product for income replacement. Again, you've got that death benefit protection, but if I need it for something else, I've got some cash value. If I don't need it, I can always leave it as a death benefit, sort of a guaranteed death benefit for legacy building. And in that regard, it works well for retirement planning as well. Retirement planning, for many people, they are looking for, additional sources of income in retirement. But in reality, and I've seen some LIMRA studies on this, there's about a third of retirees have more than they need in retirement. They've planned well and succeeded in their goals, and now they have more than they need. And so for a lot of clients, that gets into a situation of RMDs, required minimum distributions, and I focus on required. Again, I'll throw that back as my own example. My parents are that own example. They have RMDs. They have to take distributions out of, for example, qualified plans, and they don't want to. One of the nice things about life insurance is you don't have RMDs. And if you are that client who says, well, I want retirement planning, but there's a chance I might not need this money. Well, if you don't need it, then you can leave it. And guess what? All of those assets are able to be passed on through a generally tax-free death benefit to their heirs. That's a tremendous advantage, that not only are there no RMDs, but you can pass on a death benefit. Again, that death benefit is leveraged. It's higher than the cash surrender value, and until the policy matures, it's higher than the surrender value, and it passes in a tax-advantaged way and by rule of contract, so it's outside of probate. It's a great way to think about retirement planning for clients who think, well, what if I don't need it for retirement? Then what? Look at the guarantee builder. Estate planning, of course, because it's guaranteed death benefit, and 1035 exchanges, because you can perhaps hit a lot of those 1035 triggers I talked about earlier, where you might get lower premium or more cash value growth, but you're also providing a guarantee where maybe there was none in the past. So the guarantee builder can fill in a lot of those holes. And some product tips. Oh, I guess Survivor wasn't on here. Survivorship is our last Survivor product. The Survivor product is really a matter of typically estate planning type of things, or final expense, or legacy building, where you have two people insured. And we have an indexed universal life for survivorship as well. Just a few tips here for, I would suggest, number one, cover the death benefit needed. Wow, I see it too often where people are so focused on the cash that they minimize the death benefit to an extent that is probably not as much as there should be. And this should be first and foremost our goal, as providing death benefit protection. That's what this is about. So make sure that you're not so focused on the cash that the death benefit is too low. Make sure that death benefit meets their need. Identify the secondary cash value needed. Okay, we've got a death benefit protection here, but now let's see, what are you looking for with this cash value? What do you want it to provide? And another tip here is to talk to the client and agree on some assumptions and things. An illustrated rate. Sometimes I see agents might illustrate the maximum rate all the time, where their clients might not want to see that. Other times the agents may always by default show a lower rate without asking their clients what their opinions are. Or loan types or withdrawals. I mean, maybe you have the conversation of variable loans or standard loans and get their flavor for different things. But really get most focused on what's their goal. What are they trying to achieve? Is this retirement planning? Is this legacy building? Is it a combination where, again, that guarantee builder could fit in? Do they need early cash? Do they not? How valued do they see the chronic illness benefits? So have some discussions and get some understanding with them as to what you're trying to do. Make sure they understand that life insurance is a living sort of a plan, and that they should be reviewing this periodically. Make sure they're aware that they should be contacting maybe our policy service team every few years. And once they're in retirement, maybe every couple of years, to run in-force projections or something like that to see if they're still on track. So be aware of changing conditions. Here's another thing. Their death benefit needs, that may change. What you may find today for a death benefit need could be different 5 or 10 or 15 years from now. So have the conversation about, well, this is what you need today. Is there something that might be changing 5 years or 10 years from now? Think about premium flexibility. And I alluded to this on our last session. I think this is a big one. The idea here is that for retirement planning, probably your number one go-to sales concept for IUL If you assume that they're never going to change their premium, I think you're doing your client a disservice. A lot of times people are going to raise their premium as they get closer to retirement and have more discretionary income, or retirement is just more in front of them or more focused on their mind. And if you solve for the minimum face amount and leave no room for real life, for premium flexibility, you got a challenge there. So have that conversation and think about, well, is there the possibility that this premium could increase over time? Because I'd like to design this or structure this in a way that allows you to do that. And income flexibility. Be aware that you might think that they want to retire at 65, but it could be 60 or 62 or 70 or 75. And help them be aware of how this policy could perform if they take out income later or earlier. Again, make sure death benefit needs are met. I alluded to that as well. This is non-guaranteed performance. We don't want to imply or try to assure them that this is going to happen. This is all index universal life. It can certainly change. Cap rates change, participation rates or spreads change, and index performance certainly changes. Their funding will change. So all of this, if I know one thing about an illustration, I know it's not going to happen. Index universal life is just a current snapshot in time. The best thing there is to remind them to update their pictures, update their focus on a somewhat regular basis. And then again, we want to make sure that everyone's aware that this is first and foremost life insurance. There are policy charges. We're not trying to get past or avoid insurance charges. And you don't want to say that you can never lose money in an IUL, because policy charges can drop the cash value down too. So you can't say that, oh, you're not going to lose money. You're not going to get a negative interest rate, yes, but because of policy charges, account values can fall, so they need to be aware of that as well. So again, the sales concept kits, they're out there, they're available. I would encourage you to go out to our website, think of the concepts we talked about, find out which ones are most in your wheelhouse, so to speak. And if you're not real familiar with them, dig a little bit more and learn up on them. There's so much information on our website, or your MGA, your marketing company. They're a great resource to help you learn more about the concepts if you want to take the next leap into one that maybe you weren't that familiar with or haven't used a lot in the past. So in summary, we talked a little bit about the IUL client. There's a lot of IUL clients. Most people are potential clients here. We talked about the indexed UL sales concepts. The idea here is to match that concept to fit your client's need. What are you trying to achieve? We've got something here that'll work. And some tips and hints, and we gave you some ideas about which product does what and which product will run better for particular scenarios. And the bottom line here is the client's going to get death benefit protection. Secondary need is being met. That's their cash value. And really life insurance that can meet more than one need. It can meet their cash value needs and their death benefit needs, and ultimately span that gap very well. You as the agent, you get satisfied clients and you get a great commissionable opportunity. But with all of this information that you gained in this series and what more is available on our website and with your marketing company and our sales development team, hopefully you've got a really good knowledge base. You got a lot of people here to help you. So if you're looking to take on something new this year, I'd encourage you to do that. So what I would say is pick 3 clients that you want to work with. I like 3 because I think if you got 3 people you know pretty well, out of those 3 you should be able to get 2 appointments, and out of those 2 appointments I hope you're going to get 1 sale. And then $3,000, $4,000, $5,000, $6,000 average commission on some of these sales. Depends upon who you're working with. But if you want more than that, pick 6 clients, pick 9 clients. Grab a paper and pen, start writing the names down now. If you haven't already been doing it while we've been going through this, seriously, this is the way to turn it into real sales. If you just sit here and go, oh, that was an interesting session, I might have to do something sometime. That's not going to be nearly as effective as soon as we're done, grabbing that pen and start writing down while it's fresh in your mind. And then call and schedule those appointments and evaluate their needs and present Indexed UL. And with that, I'll thank the people who are viewing the recording.